In this video, I am going to address LOTL in trailing stop loss and also the stocks near daily and 75 minutes HLQ zones. Why they are having a huge success? Why not the stocks closed inside the daily or 75 minute zones or somewhat near to the stocks near daily or 75 minute zones, but they are not listed by the NeoStock software. So these are the important concepts I will be discussing in this HLQ analysis video. I am Pratap here. Today is 31st December 2024, and all of you please understand we are providing complete free training on supply demand zone price action. The cost of the training is over $8,000, but we are providing complete free training. All the training videos you can access at our NeoStock YouTube channel. At our channel homepage, please click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to our free training course. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Okay, now let's get into the analysis of the high liquidity zones. First, we are going to discuss HDFC Life. While addressing this, I will also address the question LOTL in trailing stop. And the second concept we discuss when we discuss about this stock, IZL. Okay. HZL is a daily high liquidity. HDFC Life. HDFC Life is a daily high liquidity demand zone identified by our NeoStock software. This is a 75 minutes high liquidity zone. Look into this stock. This is a rally, 2 base candles and a rally candle. This is how our software identified this stock. Of course, why this is rally? It is also got hidden body and it's a big large candle. This is another large candle. In between you have base candles. And this 75 minute zone we are fine tuned with 15 minutes time frame. Here you have a failed ERC candle as a rally. You have 2 base candles and again a rally candle. This is the fine-tuned 15 minute zone inside the 75 minutes high liquidity zone. Again this 15 minutes fine-tuned zone, further you need to fine-tune with 5 minutes time frame. That is where we are planning our trades according to our HLQ zone strategy that I explained in lesson 21. Okay, now go to the 5 minutes time frame. Here you have a rally candle, base candle and a rally candle follow through candles. So this is the fine-tuned 5 minutes area. We have to plan our trade. And today prices entered into this zone. See today at 10:25, 5 minutes candle, prices entered into this zone and we got the entry. And what is the target? The target is always HLQ zone strategy. The target is 15 minutes. 5 minute zone is the entry, 15 minutes is the target. That's why we are getting huge profits in HLQ zone strategy. Because HLQ zones are having capability to push up to 15-minute zone, at least in 80 to 90% scenarios. Rarely we see 15 minutes targets will be missed due to some high liquidity zones at 5 minutes level or 1 minute level. They may not be letting the prices. You are all aware of these points. Okay, but what is the important concept you are going to learn? Before that, let me show you what is our target zone. Our target zone is 15-minute zone. We have a drop, 3 base candles and a drop candle. And this is the one pushed the prices down up to our target zone. Now from here prices were started moving up and finally reached the target today at 14:45 candle. That means afternoon 2:45 it reached. But and let me shift to 5 minutes. How many of you watched the Telegram channel today? I sent a message. When prices are here, somewhere here, this is the area, I sent a message in the Telegram channel. What is that message I told you? Use 5 minutes demand zone for the trailing stop to book the profits in case price does not reach this 15 minutes target zone. There is a purpose in sending that message to our Telegram channel. Because I know you are going to learn an important topic. If anybody book the profit in a wrong way, probably you might be missing the profit that you are supposed to get up to 15 minutes target. The 5 minute zone should hold the prices. If it does not hold, probably price may not reach this 15 minutes target. Because 5 minutes trend will be changed during the intraday. 5 minutes plays the major role. Intraday point of view. Did anybody got the trailing stop at 5 minutes level stopped out? Maybe if you make a mistake. If you don't understand the trailing concepts related to LOTL scenarios, level on the top of the level. You already learned LOTL concepts in our phase 1 training program. And earlier HLQ analysis videos also I explained trailing stop with LOTL scenarios. But today I made it as a special presentation because in future all the people will look into this chapter. Because I will be adding this video into our important analysis and strategies playlist. Assume you have drawn a demand zone like this. Drop base rally. Let us assume. Is your demand zone is violated here? Yes. Definitely you would have booked your profit here. And you might have missed the profit up to 15 minutes. See, after that it is violated and then prices moved, again came, violated and then finally reached the target. So you might have missed this profit. You would have booked. Your entry is here and because this 5 minute zone is stopped out and you will exit here. But if I draw one more zone, now you observe carefully, we have a drop candle, you have 4 base candles and then you have a rally candle. If I draw week to week, we have a zone like this. What is this? LOTL, level on the top of the level. When you have LOTL zones, you have to use the lower zone as a stop loss. The lower zone distal line should be used. If this is violated, then only you have to exit from your trade. See how LOTL zones it is created, rally base rally LOTL. Again drop base rally LOTL. Sorry, here also drop base rally. Here drop base rally LOTL. Here again another drop base rally LOTL. That means this zone, this drop base rally is working as a high liquidity zone. This is a 5 minutes high liquidity zone. This is holding the prices. The moment the first drop base rally is created, immediately I sensed this could be a high liquidity zone. It is not a 100% confirmation, but many times we have experienced when LOTL zones are getting created, those zones are working the source. What is the main source? We call it as origin. What is the main origin? This is the drop base rally is the origin. Origin will be having the real institutional order flow. And remaining LOTL zones they are supporting zones. That's it. They might be adding new order flows into this zone. Again added new order flows here. Again added new order flows here. I know this is going to be a LOT. Sorry, this is going to be a 5 minutes high liquidity zone. If it is a 5 minutes high liquidity zone, it's not easy. This zone will be violated. That's why I send a message in our Telegram channel. Use 5 minute zone as a trailing stop. If this 5 minute zone is violated, definitely the trend in this area will be changed in a strong way, and it might be impossible or it is not easy to reach this 15 minutes target in case if this HLQ zone is violated. So that's why I sensed that point and I sent a message in that. But at the same time, I didn't give any explanation, detailed explanation, because you have to learn the concept. If I send a post in the Telegram channel, many people won't be seriously reading the post. That is what I observed. Okay, some of you book the profit, then this will be maybe still you got a good profit, but pain will be there. Why I missed this profit, extra profit? With that pain, you never make mistake in the coming days when you have such kind of concepts. Because this scenario we already discussed a couple of times in the earlier HLQ analysis videos. I didn't make them as a separate video, but while analyzing the stocks. But today I decided to make this as a special video because it is the right time to learn this concept. Especially when you are using trailing stop, you must ensure LOTL is there or not. If LOTL is there, the LOTL origin should be used as your distal line. This is the origin. This drop base rally is the origin. And remaining LOTL zones are supporting zones to this origin. That means institutions keeping this drop base rally as the main source or the origin, and then started adding new order flows in this area. Each time prices are retracing to this zone. Why they keep on adding? Because they don't want this zone should be violated until it reaches the target. 15 minutes target. So that is the reason why trailing stop LOTL scenarios, the origin should be used for your trailing stop. The origin's distal line should be, of course, you may add some stop buffer for extra safety precautions point of view. But theoretically, the distal line should be your stop loss. Even trailing stop, the distal line. The origin of the LOTL zone, the main origin of the LOTL zone. This is the main origin, drop base rally. Remaining all are part of this zone. Within this zone, the new zones are creating. By leaving this origin, and if you are depending on these, the secondary zones which are creating as LOTL in the main zone, if you are depending on this, you will be losing the profits. That's why it's a very, very important concept. Everybody, please learn this concept, especially when you are using trailing stop loss. If there are any LOTL zones, use the main source or the main origin. That distal line should be used for your trailing stop. Hope I made it clear. Okay, otherwise it's a very important concept. Okay. Now when it comes to the stock, finally reached the 15 minutes target. So how much profit HDFC Life has given? HDFC Life has given 7,535 rupees profit, which is 6.3% ROI as per one futures margin cost. So excellent profit it gave, and a very neat and clean trade. Why I am saying very neat and clean? There are no multiple orders in this zone, only single order flow is there. Because beginners, especially those who recently completed the course and fine-tuning the zones, when multiple order flows are there, sometimes you are getting a little confusion because you are in the early stage. Okay, once you get some few months experience, 3 months or 4 months, you get perfection in understanding all these multiple order flows. So it's a very single order flow. Prices came inside. Many times we use stop buffers and all. Even without using entry buffers, without using entry buffers also, if you planned your trade, in case if you plan your trade would have been executed. Moreover, prices came inside. So I am thinking everybody's orders will execute. Whoever is using HLQ zones, all our trades would have been executed. There is no question of missing. Some people say, no, I am not using entry buffer because the risk is high. So I don't want to take the trade. Excuse me. Some excuses you may tell why you missed the trade if I ask. You don't have any choice here. No excuse. You must take a trade. You can't miss it. And also reached the target, 15 minutes target. Okay. See, generally we use entry buffer. Some buffer we give a maximum of 0.1%. I'm saying maximum. It's on depending on our risk management. Okay, this is about HDFC Life. Next one is Coromandel. Coromandel is a 75 minutes high liquidity demand zone. Our software identified this zone as a rally, 2 base candles, and again a rally candle, a big candle, high explosive legout candle. Okay, our software identified this zone as a high liquidity zone, and we have multiple order flows in this area. Okay, how? Multiple order flows. Okay, now let's go to the 15 minutes time frame. 15 minutes time frame, here you have drop 2 base candles and a rally candle. You have another drop base candle, rally candle. And also you have, this is the one. Don't look into this rally base rally. This is the one, drop base rally and rally. Even you can consider the same, nothing wrong. Either one is okay. Rally base rally or drop base rally. LOTL scenario. Okay, now go to the 5 minutes time frame. In the 5 minutes time frame, here you have a drop, 2 base candles and a rally candle, and this zone is tested. This is not a fresh zone. So that means we don't plan any trades in this zone because it is already a tested zone. We have just drawn the zone, that's it. But this is not valid for the trading because it is a clear tested zone. When we take multiple trades, if it is a HLQ, high liquidity zone, so we may not be in a position to tell whether it is a high liquidity or a normal zone. Only our software can tell. If multiple times it is tested, at least 80% scenarios, we can assume it could be a high liquidity zone. Maybe 2 times or 3 times or 4 times if it is tested, at least we can predict it could be a high liquidity zone. Single test we can't predict. But software can tell, our software can tell this is high liquidity or not. But anyway, except in rare special scenarios, I am not referring software while fine-tuning the zones. Okay, there is one more order flow. We have a drop, 1, 2, 3, 4, 5 base candles and a rally and follow through candles. This is a fresh zone. And here this 15-minute zone, this rally base rally is acting as a horizon. Rally base rally is acting as an horizon to this entire 15-minute zone, this 5-minute zone. Of course, here also again created, we have drop base rally is also further created, that way also. LOTL is taking place in this area. Okay, this drop base drop, if you keep the 0.1% entry buffer, the blue color line what I have kept, that is coming. See, today prices entered into that area, have entered a little inside the blue color line at 10:45 candle, and after that it reached the target. What is the target? Generally we keep 15 minutes target, but is there any 15-minute zone? No. Why there is no 15-minute zone here? Because it is an all-time high stock. Look into this. Prices are entering in the all-time high. When the all-time high stock, if there are no zones, what could be your target? There are two ways you will do. Either all-time high you keep the target. If there are any lower time frame zones, the lower time frame zone you will keep as a target. Lower time frame zone is there. Many times the lower time frame zones at all-time high, they will prevent the stock to move further up. Many times it happens. Institutions keep strong order flow at all-time high near the lower time frame zones. Higher time frames you won't see any zone. That's why many people keep the target either all-time high, or if there are any lower time frame zones are there, those lower time frame zones we will keep as a target. Okay, 15-minute zone is not there. Is it an all-time high? See here, this is an all-time high stock. Go to the daily zone, you get even better clarity. See, this is the daily. November 2013, see how prices are moving and reached the all-time high now. So 15 minutes we don't have any zone. Okay, let us go to 5 minutes. 5 minutes also we don't have any stock. Rally, drop is there, pivot is there. Okay, I also told you earlier, if not 5 minutes, either you can go to 3 minutes. If 5 minutes is not clear. If 3 minutes is also not clear, you can go to 1 minute. So go to the 3 minutes. See, 3 minutes you have a clear zone. You have a rally, you have a base candle, you have a very high explosive leg out candle. This rally base drop you can keep as a target at the all-time high. And today prices reached this target at 13:45 candle. When you got the entry? At 10:48 candle you got the entry, 3 minutes candle. At maybe this candle also almost it reached at 13:39, 3 minutes candle. And how much profit Coromandel has given? Remember, those who used the entry buffer, those people only would have got the trade. If you would not have used entry buffer, you might have missed your trade. Coromandel gave 13,825 rupees profit, which is 11.9% ROI as per one futures margin cost. Excellent ROI it has given. So this is about Coromandel. Next one is Mphasis. Mphasis is a very tricky trade. It is a 1:3 RR trade. Probably I should have, did I update? Maybe I should have added a comment. Achieved 1:3 RR. That makes sense. Okay, this is a 75 minutes high liquidity zone. We have a drop, 1, 2, 3 base candles, and with hidden body rally candle. This is how our software identified. This is a hidden zone. This zone is not visible. People think this is a base candle. But because of the hidden body, it resulted as a rally candle. That way it identified as a high liquidity zone. Okay, how I fine tuned? Go to the 15 minutes time frame. In the 15 minutes time frame, we have a drop candle, you have 6 base candle and a rally candle. This is the 15 minute zone. Drop, 6 base candles and a rally candle. And this one again I fine tuned with 5 minutes time frame, but before that there is one more 15 minute zone in the recent price action. We have a drop, base, rally. Exactly, this is the area we got the trade today. Now go to the 5 minutes time frame. All of a sudden trading view become very slow. Okay. We have a 5 minute zone here. Within this 15 minute zone, we have a rally candle, 3 base candles and a rally candle. Rally, base, rally. This is the 5 minute zone, but this 5 minute zone is a tested zone. It's already tested. Same day, tested twice, this zone. Definitely it consumed the orders. And here we have a drop candle, 2 base candles and a rally candle. Drop, base, rally, a fine-tuned 5 minute zone. This is a fresh zone. See, today prices first time they entered. And they achieved 1:3 RR. And then the zone is violated. Why we didn't target for 15 minute zone? Because there is a gap is there. Whenever there is a gap in the intraday point of view, we keep our targets until the gap area. So exactly we planned for 1:3 level. So it reached exactly 1:3 level. Many times it happens. After reaching, whenever there are gaps, after reaching 1:3 RR, mostly they will be violated. Right? Sometimes they will reach up to 15 minutes target. It consumes, demand is very strong, it consumes all the order flow and then it will reach. Rarely it happens, but many times within the gap 1:3 level prices will reach and then shortly they will come down. Okay, why didn't plan second time? Because see, first time itself prices went deep inside the zone, the fine-tuned zone, very deep they went. Planning second trade is risky here again. Generally intraday, same zone, we take multiple trade opportunities. See, if it would have just touched the zone and moved up, maybe intraday we would have planned second trade. But anyway, see, this is already a tested zone. The tested zone easily violated. It's not reacted at all. So this 1:3 RR level, Mphasis has given 7,617 rupees profit, which is 4.8% ROI as per one futures margin cost. And the next one is UPL. UPL is a very interesting, you will be having again a special learning about lesson 22 concept. Why special learning? You are seeing a special scenario today. So far we haven't experienced, but today you are seeing. You have a low LTF zone. We have a 15 minutes LTF zone for the 75 minutes high liquidity zone. UPL is a 75 minutes high liquidity zone identified by our software. How our software identified this zone? We have a drop candle. No, something wrong. Sorry for my mistake. This is the one. We have a drop candle. You have 4 base candles, and then you have a failed ERC candle. But it is a very large candle because the body is moving out of the zone. It can be qualified as a leg out. So our software is having the intelligence to recognize this as a leg out. So software identified this drop base rally as a high liquidity zone. And this zone should be, see, this zone is already tested once. See here in this candle, prices went very deep. They went deep and then moved up. So look into the 15 minutes time frame whether there are any order flows are there. Go to the 15 minutes time frame. Here we don't have any order flows in this area. We have a drop candle, and then we have a medium size rally, and again another rally candle, large candle. Here also we don't have any zones in this area. No leg outs at all. All these are all base candles or medium size candles. But what I observed is, here there is a 15 minute zone. Where is that? You have a drop candle, you have a base candle, you have a rally candle. Drop base rally. This 15 minute zone is the origin for this high liquidity 75 minutes high liquidity zone. See, the 75 minute zone is built from this origin, but you are seeing a special scenario. So far, what is it you have seen? All the origins are having only one fine-tuned 5 minute zones. But today you are seeing 2 fine-tuned zones inside the origin. Go to the 5 minutes time frame. From the main origin you have an order flow. See, in this origin, 15 minutes origin, we have an order flow. This is the main order flow. Drop base rally. Definitely this will be a very powerful order flow. But after that, what happened? LOTL zones are created here. Not LOTL, this is also a fine-tuned zone only, not LOTL. LOTL means within the same period, but this is a different. This is 15 minutes time frame, this is 5 minutes time frame. So a fine-tuned zone is created, drop base rally. What is the difference between this fine-tuned zone and this fine-tuned zone? This fine-tuned zone is created along with this horizon. So while creating 15 minute zone, this entire 15 minute zone is created with this order flow, rally base rally. This failed ERC as a rally base rally. With this order flow, 15 minute zone is created. After 15 minute zone, next time in the retracement, during the retracement, institutions created a new 5 minutes order flow. So that way this 15 minute zone is having 2 order flows. And this 5 minutes order flow is acting as a high liquidity zone. Why high liquidity? Multiple tests. Already tested sharply. And this is the time our zone is created. Which zone? This 75 minutes high liquidity zone. And definitely we plan our trade. Earlier prices came, but they were before reaching the zone, again they moved up. But today what happened? This 5 minute zone is violated. It is violated. But the another 5 minutes, fine-tuned 5 minutes zone inside this 15 minutes horizon, that is having the real institutional order flow, a strong order flow. Today it just entered into the zone, picked up the orders. It already and inside the zone, but a little inside from the proximal line. And then sharply it moved and reached the 15 minutes target. Where is the 15 minutes target? Go to the 15 minutes time frame. You have a rally base drop, and then you have ERC candles here, failed ERC candles, drop, reached, and then see how sharply prices reached up to this 15 minutes target. 15 minutes target is pierced, okay, but it reached. And when it gave the trade at 9:45, and when it reached the target 13:15, we got two trades from this zone. One trade is stopped out, and another trade we got the success. Those who have traded in UPL, you have to take both the trades. First one is violated, immediately you should plan the second trade in this area. Several times I told people, generally one trade is stopped out, they will run away from their system with pain. No, you should not do that. Immediately we got a chance to recover our losses. I remember some 6 months back or 7 months back, one stock is having 4 institutional order flows, 3 order flows are violated, and the 4th one is successful. Whatever the losses got, every loss is recovered in the trade that we got the success, 4th one, and it gave even more profit also apart from all the losses. It recovered all the losses and gave good profit. The 3rd one has given nearly 9.5% ROI it has given in that stock. The stopped out trades, each stopped out you got 0.6%, 0.8% or 0.7%. Probably altogether you would have got around 2% loss. From 9.5, if you remove the 2%, still you would have got 7.5% ROI on that day. People who run away from the system, they might not have get that opportunity to recover that. That's why when multiple order flows are there, patiently we have to wait. If one is stopped out, we should focus on the second one. First of all, we should trust the high liquidity zones, because high liquidity zones only price direction is changing. See, this is a high liquidity zone and having a lesson 22 concept, lower time frame zone as an horizon, the 15-minute zone. And from here, everything is based on high liquidity zones. We are integrated LTF concept to our high liquidity zones. The moment you integrated LTF zone as an horizon to high liquidity zone, that become a very huge successful related concept for us. Rarely we see failures. Rarely. Okay, this is about UPL. Okay, how much profits or losses they have given? The first one has given 1,490 rupees loss, which is minus 1.2% ROA. The second trade has given 14,498 rupees profit, which is 11.3% ROA. Okay, this is about UPL. And next there is one more stock, a couple of zones are violated and we know that they will be violated. One is a high liquidity zone. High liquidity zone, today it got the expiry period. That is Balakrishna Industries. Yeah. Balakrishna Industries is a 75 minutes high liquidity supply zone. How our software identified? As a rally, 3 base candles and a drop candle. This is how our software identified. And this one is fine-tuned with 15 minutes time frame. Here you have a 15-minute zone. Rally base drop. You have a rally base drop. This is the 15-minute zone. And also we got one more order flow. Rally base drop. This is an excellent zone. See, already it gave an entry earlier. This zone is tested. Today it is violated. Okay, go to the fine-tuned 5-minute zones. See the fine-tuned 5-minute zone. We have a rally candle. Sorry. We have a drop candle here. You have a base candle and again a drop candle. And this zone is already tested. So it's not a fresh zone. So we don't have any plans to trade in this zone. When we trade, if we have any confirmation, this is a high liquidity, then we plan our second trade. But otherwise, a tested zone can't be fine-tuned zone. Tested fine-tuned zone can't be traded unless it is a high liquidity zone. See this, another fine-tuned 5-minute zone is a high liquidity zone. We have a rally candle. We have 1, 2, 3, 4, 5 base candles and a drop candle. So this is the area we can plan your trades. See, it has given several tests. See, first time it is tested. See, second time it is tested. Prices went deep, but still institutions created a rally base drop or drop base drop from this horizon. Again, third time it is tested. Fourth time again it is tested. Fifth time it is tested. Prices went deep inside. So next time onwards it is quite risky to plan. Even then it worked. Sixth time again here. And the seventh time again here. Eighth time almost, they are very close. Maybe the entry buffer might have been executed, but came very close. And finally today it is violated. Maybe today those who took the trade from this zone, your trade would have been stopped out. But whatever the profits we enjoyed earlier, with compared to those profits, this is nothing. That is the power of the high liquidity zones. The biggest advantage of high liquidity zones, we can keep on trading them until the zone is violated. One day it will be violated. That loss we have to accept by comparing all the profits we got earlier scenarios. This one we didn't plan because this is a tested zone. In this area, already those who traded earlier in this zone, they can plan. First time if you are taking trade in this, definitely it is a risky, because you never know it will work or not. And first time if you take, definitely it is a stop loss for you. It's a pain for you. But earlier profits you enjoyed and now today it is stopped out, you need not consider at all compared to the profits we got from this zone earlier. That is how we need to deal with high liquidity zones. The only problem with high liquidity zone is we never know when it is going to expire. Expire means its life is going to end. I am simply calling expire. Okay, fine. So that's why Balakrishna Industries, we are not considering them because of this high liquidity, and this is a tested zone. Okay, now the another scenario that we want to discuss. Stocks near daily 75 minutes HLQ. Before we get into this IZL, once you read these points, already I posted in Telegram, in case if you did not look into the Telegram message, for them, I am just for your convenience or even for explanation point of view also, let me read again. First of all, we got, before I look into these points, you all know HLQ zone strategy. I am believing those who are watching these videos, you have idea about HLQ zone strategy that I explained in lesson 21. This strategy is giving us more than 80% success rate for us. And also this strategy is giving an average intraday ROI of 6%. And this gives huge profits because our target is 15 minutes, not 5 minute zone. Entry is 5 minute zone, the fine tuned 5 minute zone inside the HLQ zones. Daily are 75 minute zones. In case if you did not attend lesson 21, please complete HLQ zone strategy and then go through this explanation. So what are the questions I asked here? Did you ever think why the stocks near, this is very important, near the daily 75 minutes HLQ zones are working very well as part of NeoStock HLQ zone strategy? What basis I am saying near? Is it 1% level? Is it 2% level? Is it 0.5% level? Near to the zone. Generally you people think like that only, right? Near means maybe 5% before the zone. Or maybe near means 1% before the zone. No. My software, our NeoStock software never look into the zone in terms of the percentages. It uses a special algorithm. Because of that special algorithm, we are getting success for these zones. Okay, before I get into the details, let us look into the other points. Then you understand much better way my explanation. Why not the stock prices closed inside the daily or 75 minutes HLQ zones? Always I am saying stocks near demand and supply zones. And I am not telling you what is that near all these days. You might be wondering, okay, my price is inside the zone. Can't I take HLQ zone? Inside the daily or 75 minutes HLQ zone. Price closed inside the zone. I have a fine-tuned zone, but that is not tested. Can I take a trade? This is what you are asked. You can ask the question. One more question also you can ask. Okay, today my software is listed. So tomorrow I have to plan my trade. Okay. But can I plan day after tomorrow? This is the question many times people actually ask this question. That's why I addressed this point in lesson 21 also. Today, end of the day, my software identified stocks near HLQ zone. So I am planning my trade tomorrow. Now your question is, suppose tomorrow the trade did not come into the fine-tuned zone. Can I plan day after tomorrow? Many people asked this question earlier. That's why clearly I addressed. For HLQ zones, you cannot. For bullish bearish trade setups, you can. But HLQ zone strategy, you cannot. HLQ zone strategy, the stocks identified today, end of the day, should be used only the next trading session. Next trading session is tomorrow. If holidays are there, after holidays, the next trading session. Why? That also you will understand. Next question. Why not the stocks having daily or 75 minutes HLQ zones somewhat near to the zones? Maybe they are just 0.5% near to the zone. But our software did not list. You may say the stock is very close to the zone. Can I plan HLQ zone strategy related trade? For your percentage calculation point of view, 0.5% near the zone the stock is there. That means it is very near to the zone. But our software did not list that particular stock. Now you might ask a question, can I plan my trade in that zone? First of all, the question is, if a price is inside the high liquidity zone, can I plan the trade? If my price is somewhat near to the zone, but not listed by the software, can I plan the trade? The answer is, you can plan the trade, but you can't expect 80% success rate. That is the key point here. All these days, what is the point I am claiming? All these days, why I am doing everyday HLQ analysis performance videos, these videos, every day why I am doing? Because the 80% success rate these stocks are giving or not, every day I am evaluating. Every monthly we are verifying, have we got 80% success rate or not? For the last 1 year, excuse me, for the last 1 year, we've been doing this activity every day. Only in the month of July only, I was not into this analysis, the last July. But otherwise, last 1 year, we've been doing this analysis every day. And the last 1 year, we've been observing, we are getting 80% success rate. Only 1 month, we got 79% success, 78.5 or 79, close to. That is the only 1 month, missed the target slightly. But otherwise, all these days or all these years, I mean not years, so many years, only 1 year only there completed. All these months, we've been getting our success rate. When I started analyzing all these everyday data from 2023 October I started, 2023 October. This is 2024 October completed, November, December. So hardly we completed 14 months. These 14 months continuously it is giving more than 80% success rate. But if you take the trades, price closed inside the zone, price somewhat near to the zone but not listed by software, still you can take trades, but you cannot climb 80% success rate. Maybe you may get 50% success rate, 50-50. So that is a little extra risk by taking such kind of trades. Now risk is reduced for stocks near demand and supply zones identified by the software. Let me show you an example. What happened? Why I am selecting IZL? IZL, our software identified stocks near the daily zone. But near the daily zone, just before the daily zone, a supply zone is also there. Near the daily zone, 75-minute zone is also there. High liquidity zone. Let me go to the IZL, you will get clarity. IZL is a daily zone. I am changing the time frame to daily. This is the one identified by our software. Drop, base, drop. In this daily drop candle, have you seen one more zone is there? That is a 75-minute zone. Our software did not identify the 75-minute zone. Our software identified stocks near the daily zone. Go to the 75 minutes time frame. See here, drop, base, drop. We already fine-tuned this zone, 5-minute zone. And yesterday, 1, 2, 3, 4, 5. Let me hide these 5 candles. Okay. Yesterday, the candle close. Yesterday, 75 minutes candle close is like this. So, price closed inside the 75 minutes high liquidity zone. That's why our software did not list this stock. Now, your question is, before going to this daily high liquidity zone, this 75 minutes high liquidity zone, order flow has to be violated. Otherwise, it can't go to the daily zone. So, can I take a trade in this zone? That is the question you may ask. Yes, my answer is yes, you can take, but don't climb 80% success rate. There is no guarantee, 80% guarantee that this zone gets success. I can give you only 50% guarantee. You have 50% guarantee means you have either side, equal chances. Success chances and failure chances both are equal. 80% guarantee, success chances are 80%, failure chances are only 20%. Rarely zones will be violated, rarely. But here it is not like that. 50-50 choice is there. So when you have 50-50 choice, do you take such kind of trades? It is quite risky, right? When we have other concepts that is giving you 80% success rate, why do you want to go for 60% success rate or 50% success rate or 40% success rate? Why do we go? See, we are doing trading to earn the money. We are not doing trading to spend the money. Trading is for earning purpose, not spending purpose. If you don't understand the concepts properly, trading is like spending. Actually, people who are taking recommendations and trading, actually they are not earning the money, they are spending their money. But people who, like you people, sincerely learning the concepts, working hard to understand these concepts, looking for gaining some experience. That way you want to trade. What for you are doing all these things? Not for spending your money. You are doing all these things to earn the money. So that's why when you want to earn the money, you should look for the stocks having higher success rate. You should try to avoid the stocks that are not having much success rate. So that's why we can't plan a trade in this zone. It may give success, but the percentage success is 50. See what happened today? Today the zone entered. It has resisted for some time. See, this 75 minutes candle, there is a rejection from this zone, right? But is it good enough to earn the money? No. If you get into the 5 minutes time frame or 15 minutes time frame, you get the clarity. See here, prices entered and came down, but not good enough to give you the profit. Suppose if you would have taken a trade, what is in case if you exited earlier, what could have been the RR we would have got? Let us calculate. Maybe you would have got 1:1 or 1:1.5, it might have given you. This is a short trade. So I am using some stop buffer approximately. Let us assume we are taking the trade without any entry buffer. Within this area only we are planning our trade. And if you exited here, you would have got 1:2.28 RR. But what is the minimum we are expecting? 1:3. To get 1:3 RR, see, price should come down up to this point. Did they come prices? No. This is the maximum profit you got today from this zone. That means the order flow in this area is not really strong enough. Maybe institutions might have cancelled their order flows. Okay. Already one trade it gave, but this is not good enough to get your profits. Again it gave deep inside and again came down. This time it could have been 1:2 RR, it would have given. 1:2 RR it might have given. Third time again came. So that means there is institutional order flow. Why they are not pushing very strong? Because demand is also very strong. But how do we know the demand will be less, supply will be strong? How do we know? That's why I developed a special algorithm, stocks near demand and supply zone. It understands the market volatility conditions. What could be the possibility? Stocks near demand zones, if it identifies, if my algorithm identifies, at least next day, for 80% scenarios, the supply may not be much stronger compared to the demand. Suppose if the stock is near the daily or 75-minute supply zone, my algorithm assumes 80% scenarios, the demand is not strong compared to the supply. At least 15 minutes targets, many times it will reach. That level of assessment it is doing, my software. And tomorrow market situations will be changed, right? That's why day after tomorrow you can't use those zones. Today my software is analyzing the stocks. While analyzing, it performs a special check while finding the stocks near demand and supply zones. While finding the demand and supply zones, my software also do lot of calculations to understand the market volatility related to that stock. If those conditions satisfy, my software assumes, okay, now the stock is near the demand zone. Because all these conditions what I developed in the software, they are all passed. That means tomorrow means the next trading session. The volatility will definitely, this zone will hold. Those movements definitely it will hold at least up to the 15% supply zone level it can push. Of course, software won't look into 15 minute supply zones. It just assumes based on the conditions I have developed in the. I am just telling you for your understanding point of view. It is like a confirmation that the price may reach 15 minutes target zone because of today's market conditions. Because of today's market volatility in that particular stock, it is analyzing by using several conditions. It is a complicated algorithm. That way, the software is confirming this zone is having, because it is a high liquidity zone, and today's market conditions, definitely it will support tomorrow to push the prices up, and then it confirms. Because software is not analyzing the order flow inside the zone. It is not fine-tuning the zones. It only identifies the zone is high liquidity zone or not, and then it identifies today's market conditions in that particular stock will help tomorrow or not. That way it will assume. But to support that, we will be doing fine-tuning the zone and we look for 5 minutes order flows. If the order flows are not there, we are not trading in that stock. That's why all these rules I kept. That's why manually we are doing this analysis. Which analysis we are doing manually? Fine-tuning the zones. That is what you learned in lesson 16. Lesson 16 we learned how to fine-tune the zone. I explained all the techniques. So here the issue is not about fine-tuning the zone. It is a simple skill. You already built that skill. The issue is from this zone, tomorrow's market conditions, whether it is able to hold or not. That is the reason why many times you observed our software identified stocks near the demand zone. But market is a bearish market on that day. Still, our stock gave a good long trade. It reached 15 minutes target. Many times you have seen, on a bearish day, our HLQ bullish stocks are working very well. Similarly, on a bullish day, market is moving like 300, 400 points, but our high liquidity supply zone stocks near daily or 75 minutes high liquidity supply zone, they were moving down. That means they are reacting against the market. How do we know that? Because our software at least 80% guarantee level. I am not saying 100% level. Because some of the conditions sometimes will fail. Sometimes some of the conditions during the live market beyond what our software predicted on the previous day. Sometimes, not many times. They are exceptional scenario. For that exceptional scenarios, 80% buffer I kept. That's why instead of saying 100% success rate, I am claiming only 80% success rate. And for the last 14 months continuously, we have seen achieving such kind of success rate. That's why stocks near demand and supply zones are very, very important. And the day after tomorrow, if you take this stock and if you think it will work, day after tomorrow, market conditions, our software cannot assess today. Today, our software can assess only tomorrow's market conditions, especially the special algorithm I developed in the software. At 80% level, success level, my software can able to assess. This is for daily and 75 minutes high liquidity zones. I am not talking about bullish and bearish trade setups. Bullish and bearish purely trend specific stocks. They don't really require to focus on these concepts. But what about high liquidity zones? High liquidity zones, many times we are trading against the trend. The trend of that particular stock could be bull trend, but we are taking short trades. And during intraday they are giving 15%, 15 minutes target zone they are reaching. 6% intraday ROI we are getting based on one futures margin cost. So that's why HLQ zones, high liquidity zones, we don't look into the trend, we don't look into the price direction, we don't look into the curve. All these core concepts what you learn in phase 2, we are ignoring for HLQ zones. The only one concept we are strictly following is fine tuning the zone up to the 5 minutes level. That 5 minutes order flows we are planning our intraday trades. Sometimes prices did not reach up to the 5 minutes level and move. We are missing the trades. We are okay with that. The reason is almost every day we are getting some successful trade. Every day we are getting. The only thing is you should properly fine tune the zone. Initially you may make some mistakes while fine tuning the zone. And slowly once you gain experience, you will get rid of those mistakes. Even I will also make mistakes, but rarely I make mistakes, once in a while. But we are in the beginning stage, most frequently you make mistakes. But remember, without learning from the mistakes, you won't get the experience. You may not get profits from the first month itself. You get profits if you don't make mistakes. But from the mistakes, you have to first month or second month, whatever the time or money you are investing, that is for your future's point of view. See, today some of our HLQ zone traders, today they are doing very well. Because initially they started HLQ zone trading for the last 7-8 months back. At the time they completed the course. Initially they also made mistakes. They also lost some money, but they didn't give up. Today they are earning very good profits. Because some of the members, they are sending me the screenshots. Sometimes. By seeing the screenshots I am feeling very happy. Generally, if any HLQ zone traders, when you keep your screenshots, definitely I feel happy. You can send it to my LinkedIn account. I already gave you. You can find my LinkedIn ID in our Telegram channel. You can search for LinkedIn, you will get my ID there. You can search for that keyword. You can send me a request. Some of you may feel, okay, you don't have send request. Then if you don't have send request, just follow me. I will send you back the request. Generally, whoever follows me, I will send the request back. Because I assume they are following means they are not in a position to send me the request. So if anybody is unable to send a request to me, just follow me. By seeing that, I can at least send you back the request, you can approve, and then you can connect me and you can send any of your profits you got, the screenshots. Any doubts you have, you can ask me. Or you can also comment in the comment section without sending the screenshot. At least a small text message also you can write. Today I got this much profit or this much ROI I got. Other members also see and they feel happy for that. They also get motivation. Got it? See, finally it struggled. See, it holded the prices for almost, when this is the first 10:35, and it holded up to 13 hours. And then this zone is violated. But here it is slightly pierced, okay, that is within stop buffer. And finally here it is violated. Did you get a success here? No, you did not get success. Sometimes you may get success. Price reach and it will give you 6%, 7%, even 10% ROI also it will give sometimes. But those chances are 50-50. That is what I am trying to tell you. Why not able to get huge success? Because the stock demand is very strong. Why the stock demand is very strong? Because yesterday our software did not identify the stock. Because it did not identify, chances are 50%. If 80% success rate is there, our software will identify that stock as stocks near demand and supply zones. So that's why I'm telling you, stocks near demand and supply zones are not based on the percentages. The calculation is not based on the percentages. Those calculations are special algorithms. Market volatility conditions it will calculate, and many checks it will perform, and then it will be listing the stocks as stocks near demand and supply zones. See how many stocks we are getting profits every day. See here, these red colors are very less, but these black colors are more and more. This month you see, the red colors, when we got this month, from 3rd we got the starting report this month. 3rd we got the first report. From 3rd till today, how many trades we got so far? 62 trades we got. Out of 62, how many violated so far? 1, 2, 3, 4, 5, 6, 7. That's it. Out of 50 stocks, we got only 7 stopped out trades during this month so far. We have one more day. Today is also there. When you have such a huge success, because software is doing the special calculations to identify stocks near demand and supply zones. Those special conditions are very, very critical to get the success. Because of that only, high liquidity zones are valid. Which high liquidity zones? Not all high liquidity. I am talking about stocks near demand and supply zone high liquidity zones for daily and 75 minutes time frame. I repeat again, stocks near demand and supply zones, high liquidity zones for daily and 75 minutes time frame. They are valid to get 80% success rate. I repeat again, to get 80% success rate till the next day. If you want one more day, you won't be having 80% success rate. You will be having only 50% success. That means 50% failure chances also there. So this is the reason why always our HLQ zone strategy is focusing only stocks near daily and 75 minute zone. The stocks near is very, very critical for NeoStock's point of view. Again, let me tell you the point. Stocks near is not calculated based on the percentages. Based on today's market conditions on that particular stock, based on those parameters I calculated stocks near. To ensure the next trading session, at least 80% success should be there on those parameters. You may ask a question, can we apply this condition for the other stocks? Other stocks, the biggest problem is claiming 80% success rate is not possible. Other stocks also our software identifies, but the liquidity inside the zones is a questionable. So that's why their success rate you can't again expect 80%. Maybe they might be having 55% or 60% or even less also might be there. The other stocks means stocks near demand and supply zones, but those demand and supply zones are not high liquidity zones. See, I did a big research in this area. I spent several months of time only focusing on this area. My ultimate goal is how to double the money within a month. That was my goal when I am developing the stock. At least if not double, if you sincerely trade by using HLQ zones, all the concepts, controlling your emotions, achieving 50%. If you invest 2 lakhs, maybe end of the month it will become 3 lakhs. That is the least level. Least level is possible with the help of these high liquidity zones. But you need to gain some experience. You need to avoid mistakes. All these things are very, very important. Okay, this is about the topic how we are getting success to our high liquidity zones. And IGL is a daily zone, daily supply zone. Now let me delete this 75-minute zone because yesterday price is closed inside. See the candle, yesterday candle is closed inside the 75-minute zone. This is yesterday. That's why software did not identify 75-minute zone. But software identified this is good enough to reach. But today the order flow did not reach. Okay, now let's focus on the complete drop based drop. This is the daily zone. This one is fine tuned with 75 minutes time frame. In the 75 minutes time frame, I identified this as a rally based drop. You can also consider drop 1, 2, 3, 4 base candles drop. That is also okay. Same zone only you will get. Rally based drop also the same. Because till the higher wick of rally candle. And this one is fine tuned with 15 minutes time frame. But observe carefully 15 minutes zone. 15 minutes is here. We have a very big failed ERC candle as a leg-in, 2 base candles and a drop candle. This 15 minute zone is the origin for this entire 75 minutes high liquidity zone. 15 minutes because it is at the distal line of the 75 minute zone. Now this origin is having a 5 minute zone, fine tuned 5 minute zone. See, this is a failed ERC candle as a drop candle, leg-in, 1 base candle and a drop and follow through candles. And this 5 minute zone is the origin for this. This is the fine tuned 5 minute zone. This fine tuned 5 minute zone is the origin for this entire 75 minutes fine tuned zone. So that way you can plan a trade in this zone next time. But today prices did not enter into that zone. And next one is a polycab. Polycab is also a daily high liquidity supply zone. But polycab, I think I already explained how I fine tuned. But recently price entered, that we didn't discuss. So let me go to the 75 minutes time frame. So recently when price is entered, it created a rally 1, 2, 3, 4 base candles and a drop candle, the 75 minutes zone. And also we have again another drop. This is the drop failed ERC candle as a drop base rally. Drop base drop. This is the 75 minute zone, but it doesn't have any order flow. That means a 15 minute structure is not good in this zone. So let's go to the 15 minutes time frame. See, the 15 minute structure is not good at all here. We have a drop, 1, 2, 3, 4, 5, 6, 7, 8 candles, drop. So that's why I'm not comfortable. A lot of consolidation took place here. But here a 15 minute zone is there, rally, 1, 2, 3, 4, drop candle. Now go to the 5 minutes time frame. 5 minutes time frame, there was a drop 2 base, drop base drop is there, again rally base. This is not a base candle. Drop 2 base candles are actually, this is the drop base drop. This is the ideal. This zone is tested already. See here, this zone drop base drop is tested and after that it is violated. Here it is violated. But now what happened? Rally base drop is created. Rally base drop. Some of you might be having a question. Is it really a base candle? Can't it be a leg candle? Because some more hidden body also it will get. You have a doubt. To whom to support? Whom to give benefit of doubt? Is it to select this candle or not to select? I will also get that kind of confusion, right? because this is such kind of situation. It is a kind of candle whether to consider as a leg candle or a base candle. That's why few weeks back, I think couple of weeks back, I explained a topic. 3-minute zone is a supplement to the 5-minute zone. Do you remember? If you would have learned the topic, immediately what you do, go to the 3 minutes time frame. Now look into the 3 minutes time frame. Now tell me what you do. Rally, 2 base candles, drop candle, a small pro gap. Is it a perfect zone? Yes, it is a perfect zone. So that way you can give justification for your judgment. See the power of the 3 minutes zone as a supplement to the 5-minute zone. So very powerful concept. So that way I identified this order flow. This 5 minutes order flow, that way I confirmed there is an institutional order flow. But anyway, today prices did not enter into this zone. And remaining all we discussed, and one last one now. Godrej properties. This is 75 minutes high liquidity zone. Go to the 75 minutes time frame. We have a rally base drop. And this zone is having a 15 minutes fine-tuned zone here. Rally base drop. This is having a fine-tuned 5-minute zone. Rally base drop and then follow through candles. And this zone is already tested. Prices went deep inside. Okay. Because it is a tested zone, we didn't plan any trade here. So these are the high liquidity zones identified from our previous report. I hope this information will be useful to you. Let's all meet again in our next video. Thank you.